Halstead Property, the real estate leader in video technology.
Welcome to Halstead Properties Behind the Numbers with Greg Heym for the fourth quarter 2010. I'm your new co-host, Sarah Doe Osborne, providing you with all the Manhattan real estate market information you need in the time it takes to hail a cab. Today, we're coming to you from the historic Murray Hill Kips Bay area at this extraordinary townhouse at 308 East 30th Street. This 3-bedroom duplex home also has 2 additional 3-bedroom income-producing rental apartments and a built-in heated swimming pool nestled in your own private garden, making it truly a must-see. This home is exclusively represented by Lauren Cangiano and is available by appointment only. But at this time, let's get started with our first episode of the new year with my co-host, Halstead Properties Chief Economist, Greg Heym.
Thanks, Sarah Doe, and welcome to the show. Let's begin with an overview of the Manhattan residential market during the fourth quarter of 2010. The average apartment price in Manhattan reached $1.43 million in the fourth quarter of 2010, 8% higher than a year ago. This marked the 6th consecutive quarter that the average price has risen. The median price, which looks at the middle of the market, rose 5% over the past year to $840,000, although it was down from the prior quarter. While the number of recorded transactions fell 25% compared to a year ago, this figure can be a bit deceiving.
What do you think led to this decline in sales?
Traditionally, the fourth quarter is the slowest quarter of the year for closings. However, after the collapse of Lehman Brothers in September of 2008, the Manhattan sales market froze up for several months. So many of the sales that would have closed in the second and third quarter of 2009, which are traditionally your busiest quarters, were pushed back to the end of the year. This helped to inflate the fourth quarter of 2009's figure, which actually wound up being the most active quarter that year. So now that we've returned to a more seasonal pattern of sales, it's not surprising that we saw fewer transactions than a year ago.
As we appreciate the amazing high ceilings and massive wood-burning fireplace nestled in the living room, let's move on to co-ops and condominiums. How did each perform last quarter?
Well, co-ops continued to outperform condos in the fourth quarter, helped by a pickup in sales of larger apartments. 2-bedroom and larger co-ops accounted for 45% of all sales versus just 40% a year ago. This helped bring the average co-op price up 17% compared to the fourth quarter of 2009. Condo prices averaged $1.75 million during the fourth quarter, up just 1% from a year ago.
How did the numbers fare relative to a home's time on the market and the seller's asking price?
Well, homes that sold in the fourth quarter spent an average of 113 days on the market, 14% less time than a year ago. Sellers received 95.5% of their final asking price during the fourth quarter, up slightly from a year ago.
That brings us to how each area of Manhattan performed. What did we see out of the east and west side?
In the east side market, the average price per room rose for both pre-war and post-war co-ops over the past year, although the average price per square foot for condos was down from 2009's fourth quarter. The west side market was the only area in our report to have both an increase in the average price per room for co-ops and average price per square foot for condominium apartments.
Now on to Midtown. I understand condo prices saw an increase. What led to that?
Well, there were a couple of high-end closings at One Beacon Court in the Plaza, which helped push the Midtown East average condo price per square foot 27% higher than a year ago. In the Midtown West market, sales at the developments of Sheffield and Platinum helped push up the average condo price per square foot 12% in that area.
Let's shift to downtown. What jumped out at you in this neighborhood?
Well, we saw a big decline in the average price for 3-bedroom and larger apartments in the downtown market, but that was really due to a number of sales at the Superior Inc. building a year ago, inflating the 2009 fourth quarter figure. This is also a reason why the average condo price per square foot fell compared to a year ago. And finally, in the northern Manhattan market, although the average price fell over the past year for 3-bedroom and larger apartments, the average price did rise for every other size category in our report.
On to our economy segment now. We're hearing forecasts of steady growth in 2011. What are you seeing from all your important indicators regarding that?
Well, the unemployment rate, which started the year at 10.5% in New York City, fell in 10 of the first 11 months of 2010. Also, at 9.1% in November, the city's unemployment rate is at its lowest level in 18 months and much lower than the national rate of 9.8%. Job growth has picked up in the city as well, particularly in higher paying sectors. Private sector jobs grew over 51,000 in the 12 months ending November 2010, with 14,000 of those jobs in professional and business services and almost 6,000 in the high-paying financial sector. The inventory of available apartments in Manhattan, which was over 9,000 when the fourth quarter began, has fallen to 8,100, and the prospects for future inventory remain constrained as permits have only been filed through November for 505 new residential units in Manhattan, a decline of 95% from 2 years ago.
Now for the interactive segment of our show where you, the viewer, can ask a question of our chief economist and he'll answer it on the air. The first question of the new year comes to us from Facebook. Tracy Michaels asks, I'm looking to purchase an apartment in Manhattan and I'm hearing that there will be price increases soon, but I am wary about unemployment rates still remaining high and credit markets still fairly tight. Should I be?
Well, Tracy, you really shouldn't try to time the market because it's just too difficult a thing to do. And unemployment is higher than we would like it to be, but in New York City it has fallen almost a full 1.5% so far in 2010. As far as credit markets go, while it is more difficult to get a mortgage than it was just a couple of years ago, we've really just returned back to the more historical norms in terms of securing a mortgage. My advice would be to find a home you love and feel comfortable buying, because you're never going to be able to time the market just right.
To have your questions answered, feel free to email us at behindthenumbers@halstead.com, tweet your question to Halstead on Twitter, or post to the wall at facebook.com/Halstead. Also, don't forget that in spring 2011, Halstead Property will be opening the doors to its flagship office at 499 Park Avenue with over 17,000 square feet on the 14th and 15th floors, featuring the most breathtaking views. Well, that does it for our fourth quarter installment.
For my co-host, Sarah Doe Osborne, I'm Greg Heym. Thanks for watching, and we'll see you next quarter.